12 noon, time to begin. So good afternoon and a warm welcome to you all. I hope you all are staying safe and healthy amidst this pandemic. As vaccination rates increase and the United States gradually reopens, I hope each one of you is taking due care of yourself and near and dear ones and takes care while reopening. So good luck with all of that. My name is Nilesh, and I represent the San Francisco chapter of the Institute of Chartered Accountants of India. It's my pleasure to welcome you all to San Francisco chapter's second event of 2021. Today, we're going to talk about the American Rescue Plan Act and what does that whole package of $1.9 trillion mean for you as individuals, as business owners, and startups. So that's the agenda for today. But before we start that, I'd like to take a few moments and give you guys all a brief chapter update. Many of you had joined us last Sunday as well, so you probably know most of the stuff that I'm going to say, and hence I'll give you the truncated version. As you know, San Francisco chapter has been at the forefront of the ICAI expansion in the United States. Thanks largely to the chapter's efforts. Today, ICAI is present in about 15 states all over the USA. In the next few months, 5 more chapter offices, 5 more representative offices are expected to open. And in the next 60 days, we'll have the ICAI USA National Headquarters opening right here in Silicon Valley. Do join us for the Dallas chapter inaugural event on May 22, and before that for the Chicago chapter inaugural event on April 24. If you don't know how to join and connect with us, visit us on ICAI.us. I repeat, ICAI.us, and we'd be happy to get you onboarded. We have a very active WhatsApp, Telegram, and a LinkedIn group, so there are a variety in ways which you guys can connect with us. Please treat this as a personal invitation and join us and stay connected. With this, I'd like to end the chapter update. If you guys want to know more, feel free to reach out or see the previous week's video and you'll get a detailed update on what all has been happening with us. Let me begin today's agenda quickly. As you all know, the coronavirus pandemic has caused a severe public health crisis as well as substantial economic disruption for every American. The United States federal government has responded with strength and resolve. Both the Trump administration as well as the Biden administration have made sure that they've sent out a comforting yet powerful message to all sections of the society, which simply says that this public health crisis will not be allowed to get translated into an economic disaster or a depression. So far, the lawmakers have been enacted about 6 major bills of a total cost of about $5.3 trillion. And the idea is very simple in this whole stimulus package is to provide a remonetization of all sections of the society. There are direct benefits to individuals and families. There are funds available to businesses to help them with their payroll and so on and so forth. The idea is very simple and powerful that if everybody has adequate liquidity, then the damage caused by the economic disruption can be withstood with much more grace and much more strength. $5.3 trillion is a large sum of money. At about $6 trillion, that's an amount which is equal to 40% of the GDP of the United States. So we are not talking about trivial sums of money. The impact of this is going to be felt in a very pervasive way and across industries and over a period of time. Out of that $5.3 trillion, $1.9 trillion was passed by President Biden on March 11, 2021 under the Harpa, the American Rescue Plan Act. And what we are trying to do is we are focusing on that package more. The other stimulus packages were covered in a previous chapter event, so we I would restrict my focus on this particular piece of legislation. To decompose the number of $1.9 trillion, let me just give you broad buckets. About $400 billion are going to be spent on direct payments to individuals. about $300 billion would go as direct benefits and aid to state governments, local governments. About $200 billion are going to be spent on extending the unemployment benefits that are available to individuals who lost jobs during the pandemic. Around $170 billion for educational support like K-12 school support, modification, so on and so forth. $170 billion for public health crisis and vaccinations, and about $170 to $200 billion of tax incentives. So broadly, that's the big 6-7 big buckets under which this $1.9 trillion is going to be spent. Now, these are all big numbers, and I'm sure the question on the top of your mind is that what does this all mean for me as an individual, as a business owner? How can I really get benefit of all these various packages that are being announced? And we're very lucky. We have a very good expert panel today. We have Mr. Sanjeev Gupta and Mr. Dan Cross. They are leading experts in Silicon Valley Bay Area, and they are here to help us understand this package and guide you guys through as to how best you can leverage that. Before I actually start putting questions to them, I want to make 2 disclaimers. Both these gentlemen are not making any professional advice to you today. This is not some kind of a forum where you're getting, tax advice or investment advice. This is merely sharing of educational information. If you need any help, please do consult with them, and that's a separate discussion altogether. And secondly, this event is being recorded. It's going to be shared on a public platform. So before you ask your questions and before they respond to the question, please bear that in mind. This will be available on public portals. With this, I'd like to invite Mr. Sanjeev Gupta and Dan Cross onto the panel. Thank you so much for accepting our invitation, Sanjeev and Dan.
Good afternoon, everyone. Thank you for enabling us to become part of this event. And definitely we can share a lot of information on this ARP. Thank you.
Thank you for having me.
Thanks. Before I actually shoot you with questions, it might be good if you both could spend a minute or two talk about yourself. That will help our audience to understand and then ask more relevant questions. So over to you, Sanjeev, first you and then Dan.
Yes, we are talking about American Rescue Plan for this event. So this is becoming a very important act which has passed on March 11th. We always keep saying that planning is an important part of any person, whether it's an individual taxpayer or business tax filer. But this has become more evident from the passing of this act. Now it's not only for you have to plan things for how to reduce your income or what are the ways you can invest your money, but also whether to file the return or not. Whether it makes sense to file 2020 return or 2019 return. What are ways to look into different provisions of the act so that you can benefit from a lot of things: unemployment compensation, stimulus payments, advance child tax credits, and then child independent care credits, student loan forgiveness. It's a lot of things are there which is going to impact not only 2020 tax filing but also 2021. And for business tax filers, it's very important to look at their ERCs credits. So it's one of those acts which really want people to have to go into it deeply, and before they file the return for 2020, be careful and understand the regulations, and then file the 2020. Don't go ahead and just file the 2020 tax return. That will be my summary of this act.
Dan, you want to introduce yourself and some opening remarks?
Yeah, sure. Thank you. I am first off happy to be here. Thank you again for having me. I am originally from the East Coast, transferred to the West Coast in December of 2019, right before the pandemic. So it's been a very interesting introduction to the Bay Area so far. My specialty, thank you very much. My specialty is both with small businesses as well as individuals. You know, this act, I think, you know, it obviously has a lot of good benefits for everybody to learn about, but there's certainly a lot of things that are still being rolled out, especially when you talk about child tax credits, for instance. You know, there's advance payments that we're going to be talking about that are supposed to be happening between July and December. And what's very unprecedented about this is that it's going to be on the IRS to, be the ones that actually dish out these payments, and we obviously think about the IRS as a tax collection agency, right? This isn't really a part of their purview. So there's definitely a lot of uncertainty about how certain things are going to get integrated as a result of this act. But looking forward to diving into it with everybody.
Cool. Great. That's awesome. I will start asking you guys questions and we'll take it as we come along. There are some questions that are also popping up on the chat window, but first let me start with what was asked earlier. So at the very basic, can you give us a broad overview of the provisions of Harpa relevant to businesses? Any special provisions for small scale companies and specific inputs for startup companies? Sanjeev, you can start, and then Dan, you can add on.
Yes, so like I said, a lot of provisions are there for small business owners. Like we are saying about the ERC, which is a major part of the piece of the legislation, how to take benefit of the payroll tax credits for small business owners. So it's really not only looking into 2020, but also looking into 2021. And the rules are different in both the years. 2020 is more about reduction by more than 50%. And there's a gross test of the whether the business is running, not running, shutdown, partial shutdown, what are definition around those areas. So the credit is equal to 50% of the $10,000 per year in 2020, but for 2021 is increased to 70%. 10,000 per year has been like increased to 10,000 per quarter per employee for 4 quarters till December 31st, 2021, and 70% credit. So it's $7,000 per employee per quarter. Now you can definitely take the benefit on either you can take the benefit of the CRC based on few things like you can do the amendments, or you can claim advance payment on $7,200, 7,200 form, or you can also withheld taxes, payroll taxes, Medicare. They have applied it to Medicare taxes. So definitely for business owners, that part ERC is very important to understand the drop in revenue or to other things. And then there are specific provision to relevant industries like restaurant. Grants are there for business. Restaurant business have suffered a lot. How are they going to get this grant? SBA is still working on that one. But what we know is based on the loss in revenue from 2019 to 2020. And also for businesses who are not in running in 2020, what happens to those restaurant businesses? Are they, what will be, they are just expenses. They are just starting the businesses. Can they get the grant? So SBA is still working on that one. Then we have for shuttered grants for entertainment industry, which already started. And then on top of it, we have the EIDL grant, which is increase in EIDL grant for EIDL loan for businesses. Now, SBI sent emails for business owners that they requesting for increase up to $500,000. So you have to respond to that email. So definitely those provisions are there which help the businesses for getting the cash flow required. And then there's special ERC provisions for startup businesses. Like you are in a startup mode and your expenses, payroll, how to take benefit of it starting from third quarter. You can do up to $50,000 per quarter on the wages paid to employees. So these are some provisions of the act which is applicable to business owners.
Great. Thank you, Sanjeev. Dan, would you like to add something to that? I'll repeat the question. Any broad overview for business-oriented provisions focused on small-scale businesses and startups? Do you want to add something to it?
Well, I'm presuming that we're going to dive into some of these issues in more detail. So, considering the amount of time that we have for today, why don't we, move along and dive into some of the issues?
So maybe I'll put the next question to you. Can you talk in more specific details about the employee retention credit? What are the requirements for a business in terms of eligibility requirements to avail that? And there is a new category called recovery startup business. Can you talk something more about that?
Sure. So let's first start out with the fact that specifically for this act, the credit has been extended to December 31st of 2021. It was initially supposed to expire after June 30th, right, as a result of the Consolidated Appropriations Act. So it's important to note we now have a full year for 2021. Another thing to note, if we talk about the recovery startup business aspect, is that the business needed to start after February 15th of 2020. So that's number one. Number two, gross receipts needed to be $1 million or less in 2020. Okay. As Sanjeev said earlier, the credit is going to be capped at $50,000 in the aggregate for all employees for quarters 3 and quarters 4 of 2021. But what's great about the credit eligibility for startup businesses is that we're not looking at a drop in gross receipts. So that's the key aspect when it comes to recovery startup businesses.
Okay.
Now, talking about the credit in the context of businesses that are established and wouldn't fall into this category, when we're looking at first off what this act has accomplished, the big part is that, you know, with the CARES Act, if you were getting a loan with the Paycheck Protection Program, you weren't eligible for this credit, right? So now what this act is doing is, just because you have triple P loan proceeds that you've received doesn't immediately disqualify you. Now there's qualitative factors to look at, but we need to segregate that based off of the criteria for 2020 versus the criteria for 2021. Okay. As far as 2020 is concerned, like Sanjeev had alluded to earlier, you're looking at a drop in gross receipts of at least 50%. And you're comparing that to the calendar quarter 2019 versus a similar calendar quarter in 2020. Versus when you're looking at 2021, that percentage has dropped significantly, right? We're looking at
Absolutely.
a 20% decrease, which is huge. And not only that, what's great about 2021 is that if, let's just say, hypothetically speaking, that you have that 20% drop in your first quarter of eligibility, what you're allowed to do in the second quarter, if you don't meet the eligibility requirements because you don't have that same percentage drop in revenue, they allow you to look back for one subsequent quarter. That way, you'll still have the ability to take advantage of this credit for at least 2 quarters.
Correct. So that's an important distinction.
Definitely. And you know, the other thing that we have to look at is what are the criteria when we look at how this credit is measured? Because what we're looking at is that you can get for 2021 up to a $28,000 credit per employee. And what you have to look at, though, is that there's a threshold test, and it's different for 2020 versus 2021 when it comes to the number of employees that you can have that determine whether or not you would be eligible for this $28,000 credit. Okay, that count for 2020 is you have to have, if you're over 500 full-time equivalent employees, right? Any eligible employee that you have, you can get this credit for, whereas in 2021 that number drops to 100.
Okay.
And the reason why I'm mentioning this is because when you're looking at whether or not you can take a credit for your employees when it comes to this count, once you go over and above that, the calculation of the credit is completely different. It's not based off of employees that are currently working for you. It's based off of employees that you're currently paying to essentially not work for you. They're on leave.
Correct. Correct. Makes sense. Sanjeev, do you want to add something to that?
Yeah, Dan has covered mostly all the points. Just wanted to highlight two more points. One point is if the business owners has PPP loan, uh, so the salaries that you've used for a PPP loan forgiveness, you cannot count those same wages for calculating the ERC. That's number one. Number two, what are the wages to be included in those calculations for ERC? You have to be careful. You can't include the wages for the families and friends of these owners of the corporations. So they're not eligible wages. So if you pay salaries to your kid or to your spouse or to your uncle, to your nephew, to your aunt or whatever, that wages will not count towards ERC. So that's will be very important. And when it comes to PPP, like I said, the wages will not be important. If you apply for PPP loan forgiveness and you don't use the 40% expenses like rent and operating expenses and just use the whole payroll for PPP loan forgiveness, that whole payroll will be disqualified for ERC. So it's really
Okay.
very, very important that when you file for PPP loan forgiveness and you have this ERC, you have the ERC applicability, be careful in computing the wages and expenses for loan forgiveness.
And I'll just add one more thing that I think is important for everybody to note. When it comes to PPP loan proceeds, as we know at this point, after a lot of debate and a lot of different organizations advocating for this to happen, the loan forgiveness of PPP loans, not taxable, the expenses that you're using your proceeds for are fully deductible at a federal level, which was a big point of contention. The reason I'm mentioning this is because when we look at the employee retention credit, those expenses are not deductible for tax purposes to the degree that you're using wages to claim this credit. So that's a big distinction between PPP and this credit.
Yes, yes, that's an important one. And on this topic, maybe you can also respond as to you did differentiate between what are the difference between the previous stimulus and this stimulus. Are there any other big differences between the previous stimulus packages that were announced under the Trump administration and this stimulus package, which people should be aware of? You did mention a couple of them, but anything else that comes to your mind? Both of you, Sanjeev and Dan.
So you're talking about the stimulus payments, unemployment, like there are a lot of differences.
No, I'm talking about business-oriented provisions on this subject of PPP, ERC. If there's anything else that we can cover it right now. Of course, we'll come to the individual provisions later, focusing on individual assessments.
Well, we have the recovery business owners, the recovery businesses, the distressed businesses, people who are running a distressed business, they were not able to do anything in this one COVID scenarios. So they were distressed. So and they have less than 10% receipt, in 2019 and in 2020 as compared to 2019. They can also qualify for ERC. Definitely, the ERC in the current scenario is more defined and more clear. And how to claim this also is very clear. Other than that, I don't think anything affects there's anything change because PPP and of course another act in the CARES Act there was net operating losses carry forward. You can use the net operating losses. You can do a COVID distribution from retirement accounts. Those things were there in the CARES Act, but not in this one. This is more relating to ERCs of this act.
Yes, yes. So one important message I want to give to the audience is that when you guys are really thinking about your PPP forgiveness and looking at those numbers, do go back and consult your tax attorneys and your CPAs because clearly lot of regulations and guidance would have evolved over the last few months. So it may be worth your while once again to work with experts like Sanjeev and Dan and whoever else is your advisor when you are looking at these kind of availing these benefits. So it's not it's money for jam, it seems, but it's not that easy. Is the message I want to give it to you all.
Like Nilesh, I just said it's so important this time whether to file the return or not. That's important.
Correct.
So just don't go ahead and file 2020 return because there are certain provisions in the act where you can get the money and still file the return and don't have to pay back.
And another aspect that we're obviously not going to cover in much detail, but for all California businesses that are listening to this, we're still waiting for official guidance from California about whether or not they're going to conform to the rules around the deductibility of expenses pertaining to PPP loan proceeds.
Yeah, Dan, I just heard yesterday, like in fact, yesterday evening, some clarification came from Cal CPA about Cal CPA that AB 80, they're going to amend, they're doing amendments in AB 80. So they're saying that you can get full forgiveness for the expenses like federal, but they have to qualify for the drop in revenue test.
Correct. Yes.
In any quarter. So that will be a real challenge. That will really, what will be the standards for those things? That we have to find out.
So it's kind of an evolving situation is what I understand from your talk.
Yes. And because of that, we are not able to file so many returns, so many pending. It's really, it's really nightmare to file those returns because we are waiting for those clarifications for so long.
True. One question that had come up from the audience at some stage was that what about, are there any fresh funds available under the PPP program? And what are the updates about the first draw and the second draw? Anything that they should know about?
Well, first draw is if you're not applied for the first time, definitely you can apply under this one, PPP second round first draw. There's no qualifying standard like we have for the second draw, like 25% drop in revenue or shutdown requirements. So there's nothing in the case of first draw. So if you're that business owner who had not applied in the earlier stage of PPP round,
yes,
you can apply under the first draw. The same standard as first draw. Non-profit organization, they get more opportunity to apply. Small business owners, they get like if you're sole proprietor and self-employed people, they can apply based on the gross revenue, not based on the gross net income. So if we are making gross income good amount of money and 2.5 times of the revenue up to 100,000, you can get that gross revenue for sole proprietors. And this extended till May 31st. You can keep applying till May 31st. Another month is given for SBA to evaluate all those applications. So till May 31st, still there, and there's a good chance of that you will get this loan. And really, we are getting more clients who want to apply, and really we need to spread this word that this money is there and it's easy to obtain. It's not difficult.
Yeah, I think that's important because there are a few people who still feel slightly overwhelmed by this whole complexity of this PPP. There's a question that's come in from Jaishri Subramaniam, where she says that PPP, when do you expect the forgiveness application to update the gross income calculation for forgiveness, as the current version is only saying net income for self-employed?
Yes, they are working on this update from the SBA. They are going to correct those things. Yes, it's a good question. So still they are working on that one.
So no new update on that subject as yet.
So SBA has doing a lot of things.
There was another question. Before I jump onto that, Jayashree has a follow-up question. Give me a second. She wants, so we have 24 weeks plus 10 months of wait. Yeah, yes, Jayashree, I think that's the way it is. As Sanjeev said, we will have to wait. The next question we had from the audience was, what are the norms for paid sick and family leave credits, and how have they changed under the Harpa? Dan, you want to take that?
So the ARPA extended past the first quarter of 2021. So now it's through September 30th of 2021. And the amount of wages per employee that are eligible have increased from $10,000 to $12,000 per year at this juncture.
Correct. I know we did speak a little bit about the restaurant business. So any update on the restaurant revitalization grants, or you're still awaiting guidelines on that?
We are still waiting for the guidelines. They are going to start very soon. That's what SBA keep promising, because we have a lot of restaurant clients. So we are waiting for those applications, for those things. Yes.
So if there is somebody in the audience who has a restaurant business, they should what is approximate timeline they should be looking out for, and what should they watch out for?
As soon as they are saying they are going to work on it, maybe by next week, I will say.
Next week. So it's imminent. Yeah, okay. What about shuttered venue operator grants under ARPA? Are those eligibility requirements also available, or they are still awaited?
So this program is for venue operators. So we're talking movie theaters, concert venues, museums, performing arts organizations.
Correct.
As far as some of the other eligibility requirements, the company in question has to be operating as of February 29th of 2020. Okay, that's number one. Number two, this seems, this is an easy thing to do. Assuming that you're a venue operator and you meet the operating date, you need to create what's called a system of award management account in order to actually be eligible to receive the grant. If you are going to apply for this grant, you can't apply for a restaurant revitalization grant. So you can't double dip and apply for both of those grants. The total grant, I believe initially, if you were getting a triple P draw, you couldn't actually apply for this grant. But now there's a cutoff where if you apply for this grant and you get triple P draw after, it's either on or after December 27th of 2020, whatever the amount of triple P proceeds you receive, that reduces the total grant that you're eligible for under this regime. The total amount of the grant is completely excludable from income, and the expenses that are used with this grant are also fully deductible for federal tax purposes. And I believe that the grant, the opening to start distributing grant proceeds was supposed to occur about a week ago, but I know that there was a delay in rolling that out. I don't know if Sanjeev, if you've heard anything.
No, not yet. I think you have said the whole thing. Yes, I don't see anything extra to add on that. Yes.
Great. I have asked you the questions I had from a business standpoint. If I miss some aspect about business provisions in ARPA, I would like you or Sanjeev, Dan or Sanjeev to talk about it, or then we can move on to the individual provisions. Any last comments about business related provisions, Dan, which we may have missed in the questions?
I mean, I think we covered the big ones, and I just like to just talk again and just say that this employee retention credit is huge for people, especially for 2021. So definitely look into your eligibility requirements and make sure that you're talking to your advisor to figure out the best way to maximize receiving this credit, as well as if you're getting triple P proceeds.
Great.
Yeah.
Sanjeev, any comment from you?
No. I will say for business owners, definitely like ERC is a big one, but I will also caution them on claiming this credit, like we said already, that PPP loan forgiveness and ERC wages should be properly considered, and also the basis of for S corporation shareholders and the is important because they are going to. They have to reflecting their base. They're going to have a tax-free basis, increasing basis for the S corporation basis. So ERC will not be increasing. So when you do the California return, you have to be careful of treating those things on your tax returns on your California return, where the basis will be different. The amount of California taxable income will be different, and you have to wait for more clarity from franchise tax board. So just be careful on that account. But other than that, yes. But like keep saying, it's important that you don't do things in a hurry this time. You have to be very careful on that one.
I just want to tell all the audience members that if you guys have any questions, feel free to post them on the chat window. I am looking at it constantly, and I will ask questions from there on a live basis. Meanwhile, before we move to the individual provisions, there is one final question from Mangal. He wants to know employee count. How does the new employee entry or exit count? How is it considered during this period to establish the count threshold? Dan, you want to answer that?
I would defer to Sanjeev on that if he has any insight.
Yes, so the employee count, which is based on the if the person is looking for PPP and for looking for ERC, and definitely the calculation based on the number of hours they work and the period they will work part-time, full-time. So that is different count for PPP versus ERC calculations. So it's a whole lot of logistic there. But generally speaking, I will say that 40 hours is the main criteria one should look into for PPP and this one. But you have to assign points for claiming the PPP loan forgiveness, eligibility for full forgiveness. But for ERC, like 40 hours is the main hours. And now, if it's part time, you have to look into different criteria. But wages, like I said, when we look at the wages paid to the qualified individual, like I said, the relatives and will not count. The hours will not count. So that's also important to be taken into consideration for ERC.
Thank you, and I'll move on to the individual provisions. Can you guys give a broad overview of the provisions of ARPA relevant to individuals, whether small individuals in terms of the smaller size or high net worth individuals in terms of their portfolio sizes? What are the important provisions which an individual tax filer should be aware of? Do you want to start with that, Sanjeev?
Like the most important provision is unemployment compensation. I will say that because the $10,200 per person when filing joint is $20,400 of taxable wage. You can taxable unemployment will be tax free from federal. Of course, California you don't have to pay any taxes. Now your AGI limitation is important, $150,000. So there are certain things you have to plan things out for 2020. So like IRA contributions and other things you can look into for lowering your taxable income. Stimulus payment, a lot of IRS has come out and said they have already even fifth installment of a stimulus payment so far. So stimulus payment, $1,400, every person is getting it. Of course, AGI limitation, married filing joint is up to 160K AGI and single is up to 80,000. So there is a smaller phase out as compared to earlier stimulus payments. But the important thing is adult dependent are allowed. So if you have parents staying with you and they're dependent on you, you can get $1,400 provided they have social security number. Social security number is going to be important. There are people who are on H1 or there are people who are on H4 working on different H4 and other visa status, and they have a tax ID number, not a social security number. They will not qualify for this one. And but dependence is a big change in the stimulus payment. Again, it's based on 2019. It's based on 2019 or 2020 filed. But again, that's important. Like keep saying, it's important not to file 2020 if you're 2019. It's lower than 2020. Get this money and then file later on. But reconciliation for this one is done on 2021 taxes. So if you don't receive it, then you can look at you will get this 2021 tax when you do the tax filing. Child tax credit also is important. It's raising the $2,000 to $3,000 and to $3,600 for kids under age 6. Refundable credit is increased from 1,400 to 3,000. Child and dependent care, important provision for business owners who are providing daycare facilities. People want to send and start sending their kids. If they send, they qualify for qualifying expenses, child like $8,000 to $16,000, increasing from 3,000 to 6,000 for those credits. 35% credit to 50% credit. Of course, the AGI phase out is there for child and dependent care. Student loan forgiveness, keep saying, and the important thing is premium tax credit. So if you are having a premium tax credit, you are going to pay that premium tax credit because your AGI was very high as compared to when you get those insurance credits from the covered marketplace. You were supposed to make those payments, but now you don't have to make those payments for 2020. 2021, they have raised the poverty level. In fact, they have taken out the poverty level, 400% poverty level There's under provision for 21 and 2021. So those are important provisions which Cobra, in addition, there's one more Cobra payments are there, April 1 to September 21st. So those are important things for individual tax filers.
And I know you focus on family offices and high net worth individuals. Anything special that you would like to mention from that perspective?
So
we can't hear you.
Yeah, I think something happened. Some
Yeah, we will just give a second to that.
can you hear me?
Yes, I can hear you now. Yeah.
Okay. One of the issues of doing stuff like this remotely.
we all used to it now.
Yeah, except for my headset sometimes.
If it doesn't happen in a Zoom webinar, then I start wondering, has people gone off to sleep? So this is a sign that all of us everything's okay.
So what I was about to say was that clearly a lot of what Sanjeev just spoke about has nothing to do with high net worth individuals, right? Because a lot of the phase outs are, in that $125,000 to $150,000 range. I guess, when it comes to, high net worth individuals, the one thing that I think there was a lot of confusion about as a result of, the TCJA was about excess business losses from either partnerships or S corporations, where essentially when you had your business and it had an operating loss for a married joint taxpayer that was over $500,000, that loss was disallowed in the current year and rolls forward to the subsequent year as a net operating loss. The CARES Act delayed that significantly, and now as a result of this new act, taxpayers don't have to worry about this until after December 31st of 2027.
Makes sense. You want to add something to that, Sanjeev?
Like Dan rightly said, that provision is there for excess business losses, net operating losses. Another thing that we can look into under the CARES Act, we can look at carrying it back to 2019 and lower your AGI and see what happens, whether you can get those benefits. And 2020, like I said, you can look at the bonus depreciation and do all those business tax planning, so that your total income get reduced. AGI can get reduced. So those are the areas, of course, for if you're making a lot of income, you have not many provisions from a visual point of view that you can take benefit of.
And just talking about the NOL carryback claims, that in technically, as far as the quick refund claim, that expired a very long time ago at this point. However, the statute of limitations is based off of the year that the net operating loss has occurred. As far as when you can start, you can still go back and start amending tax returns, right? So if you need to go back to 2014, for instance, or 2015,
right,
you're still okay because of the operating loss occurring in 2020.
I think that's a very important provision for a lot of business owners to look into the net operating losses and carry it back. And in one of those years where they make the money the most and get the refund, that's an important thing.
Yes, that is a benefit which leaves money on the table. So why not grab it and work with your advisor, work with your accountants, and see what best can be done about those years. Yeah. Great.
And one other important part to note for anybody that is a California taxpayer, California was not kind in conforming to some of these rules. And when it comes to excess business losses, they thought it would be a good idea to not conform. And so that creates some complications at the state level when you're preparing your tax return. They did not delay the rollout of those rules.
Okay, that's an important one. Jayashri has a question about net NOL. Can we still get the refund even if the statute of limitations has expired?
Yes, definitely. I think it can
Yeah.
get under CARES Act, yes.
Yes, Jayashri, I think that was covered in the talk, but I think it's important to know the difference. I know, Sanjeev, you did mention it in your opening remarks, but can you talk about specifically about the eligibility criteria for child tax credit?
Yes, so like I said,
that was a specific question which came from the audience, so I'm just want to be more
so
precise about that.
Yeah, so child tax credit, like I said, has been expanded from 2000. Earlier it was 2000. 2000 consists of 1400 refundable and 600 non-refundable credits. So now they've extended from 2000 to $3,000. $3,000 will consist of 2000 non-refundable and $1,000 non-refundable credit. AGI limitation still applies. You can get up to 400K of AGI merit filing joint. That limitation still there. It's not expanded. Now, if you have a kid under age 6, from that extension is there from $2,000 to $3,600 for kids under age 6. Why they choose under age 6? This is a big question. We don't know what happened. Why specifically targeting age 6? We don't know. For other AGI limitations do apply, and for adult dependents, if they are dependent, they can claim the child tax credit. And also age limit is not 17, it's 18 this time. So that also one has to take into consideration for child tax credit. Other than that, of course, if you IRS said that they can give the money upfront starting from July. We are still waiting for details how they're going to distribute that money from July onwards. If you're looking to get higher income in 2021 and making your AGI disqualified for getting the child tax credit, it's better to get the refund, better to take the money from the IRS. Because it's a reconciliation based on 2021, you don't have to pay it back. So those things are important considerations. So if you're, again, the planning becomes important, and we are still waiting for instruction from IRS on this, how this is going to play out in July, but they are working on it, yes.
In fact, my message to the audience and would be that, even if you're an individual taxpayer and you think that your returns are straightforward and simple, still in 2021, I think it's worth your while to work with an advisor and see how you should file the tax returns and what are the various credits available to you. So there's a lot of money on the table. Don't just let it go. Work with your CPA, your advisors, your attorneys, and make sure that you avail of all these benefits. I mean, one of the reasons why we are doing this webinar is just to highlight these points to the community at large. There was one more question that had come, what are the actions one can take if one doesn't receive the individual recovery rebates, the $400 billion which are likely to go as direct payments to individuals. If somebody does not receive it, what are the actions that they should take? Any of you can take that question.
Dan, you can go
ahead. So, for me in particular, my client profile, we don't really have many folks that are in this bucket. So I'll need to defer to Sanjeev.
Yeah, so in those cases, it's better to take there's a provision on the tax return 1040. There's a recovery rebate credit, which is there, line is added as a credit. So if you have not received those payments, first stimulus or second stimulus, you can always qualify based on your AGI. You can get a credit on your tax returns 1040. And third stimulus, if you don't receive it, you should receive it. If not, you can go to the website irs.gov and say, where's my payment, get my payment, and see what the status is. And don't worry, if you don't receive it, it will be reconciliation on 2021 taxes, not 2020, 2021 taxes. So don't worry, you will receive those credits.
A related question that had come more from the audience was, what are the actions that one can take if one doesn't receive unemployment assistance? And if once received, how does one The unemployment assistance funds, if you don't get it, how do you really claim it? And once you receive it, how do you report it? That was the question.
It was some interruption. The question, can you repeat that question one more time?
I will. Sorry for that. I was saying that the question was that if somebody does not receive the unemployment benefit, how can he avail of it? Number one. And once he gets that money, how does he report it on his tax returns? These were the two questions.
Yeah, so if he has not received, so if he's an individual taxpayer and he's W-2 wages and he was laid off and he was supposed to receive it, did not receive it, then there's no way that you can go back and recover that unemployment assistance. So that EDD is very clear on that one. So you cannot go back and claim it. So unfortunately, you cannot claim on your tax returns that you should uh, get back those wages which you should have. In case of 1099 subcontractor, again the same rule applies. You should have got a PUA assistance last year in the CARES Act, and with this one, if you're not getting for the current one, it's better to go to EDD website and register there and see why you're not getting it. Maybe of course the systems are EDD is like full of claims. The systems are hacked so many times, so it's better to connect with them, see why you're not getting that for the current one, because current one starts from March 15 to goes up to September 15. So you should receive it. For earlier, if you not received, unfortunately, you cannot go back and claim it.
Yes, I hope that clarifies to the audience. With this, I have done with my questions on individual provisions. Anything that you would like to add as your closing remarks?
Like I said, we have to be careful with like planning and filing the return for 2020. Really, a lot of things are there which we have been talking about. Don't go ahead and just go ahead and just file the return, get the refund. It's going to impact 2021 tax filing. It's going to impact other things, other provisions. And other thing is, a lot of businesses have received California. If you're a California business, of course we are California. So if you receive a lot of grants from city, county, and other things, they are taxable from a federal point of view. So don't forget that. And when you're doing S corporation, LLCs, and the basis calculation becomes important area, how to adjust those things on your M1, M2 schedules. That's also important area to look into. So this year, tax return filing is not just you can go online and do the turbo tax, other things. Just be careful. Just be connect with your professionals, get the right advice, and then go ahead and file return.
Yes, yes. We have a couple of questions on the chat window. I'd like to pose that. Jayashri has one more question where she says that with the additional tax credit that is expected to roll in from July 2021, would it raise a red flag for married couples to file separately with a lower income spouse claiming the dependents, so they have better eligibility to claiming the credits that would have otherwise not come to them with a joint income? And the question also applies to 2020 tax returns being filed separately to claim lost stimulus due to income restrictions. Sanjeev, you want to take that one?
I think Dan was going to say. Dan, please go ahead.
Yeah.
Well, I was just going to point out that, you know, I get asked a lot of times with my clients about whether or not it makes sense to file as married separate. So I really think it depends on the facts and circumstances with regard to the individual that's asking this question. And what I mean by that is depending on how much income the household is earning in total, when you file as joint, the top tax bracket of 37% doesn't kick in until we're talking about income that exceeds over $600,000. Whereas when you file as married separate, that top rate kicks in at about half that number. So while, you know, this benefit that we're talking about when it comes to claiming, you know, child tax credit or whatever it is, could be nice where you could be eligible for that if the lower income spouse is filing separate. You really have to look at the complete picture on whether or not this is going to be efficient from a tax perspective, because the higher paying spouse can end up getting hit with a very large tax bill as a result of filing separately just to claim this credit.
Yes. Yeah, I think it's an important part or to consider when you're deciding on the filing strategy. Sanjeev, do you want to add something to it?
Yes, so we have to be careful with filing separate because California is very strict on that one. Being a community property state, you have to file that Form 8952. You have to segregate your wages equally among the spouses and all your income. People don't do that. They don't just play with that filing separate, and lot of tax professionals I've seen. They have their they get this filing separate. They don't report proper incomes and try to give the benefit to the taxpayers, like a lot of child tax credit, medical, restaurant Schedule A itemized deductions. So all kinds of things I've seen on the returns. Just be careful on that account. You have to be really living separate to file separate, and you need to qualify standards. Qualifying standard for this one. And I've seen people filing as head of household too, with dependent, uh, and they don't meet the requirements of those qualifying dependents. So just be careful on being in California. You have to be very clear about my filing separate. Should not be just filing separate just to get the benefits.
Correct. Absolutely. Uh, I am through. There is one more question that's come in, which is slightly related to the business provisions. This is from Mark. Uh, it looks like there is a long delay in getting the forgiveness. We filed it late last year and still no response. Any thoughts or comments about that? If they are it's taking time for forgiveness. Does anybody want to respond to Mark on that? Sanjeev?
Yeah,
Dan?
according to us, we have received all the forgiveness application, all given green signal by the SBA, including people who got more than $2 million of loan from SBA. So we have got. So I'm not sure why there is a delay. There has to be some cases, something maybe they can connect with the SBA and find out. Anything to add on this, Dan?
No, I mean, do we know, we don't know how big the loan is.
Yes, yes.
Right, because they're, depending on how big the loan is, there could potentially be an audit, right?
Correct, absolutely correct. So Mark, the message is that you need to go circle back with your advisors and see best what can be done about this. With this, I'm through with my questions on the tax provisions front, and we are in the last 3 minutes of our session. There is one more question which had come in, which is slightly general in nature, but I'll still pose it to you guys and you can choose if you want to answer it. So the question is, what will be the long-term impact of Harpa? With all the stimulus bill money floating around, will it cause hyperinflation? Will it cause higher tax rates? And will it cause dollar devaluation? I know we are stepping into other territories, but since this is a question on the minds of the people, very often it gets thrown around. So, your views on these three topics, inflation, taxation, and devaluation.
I think that this is a very loaded question with 3 minutes to go, so I'll do my best to answer some of this. There's a lot of chatter out there about how are we as a nation going to pay for this bill, and I think the simple answer to that is via taxation, and it's going to come at the corporate level. There's talk that the corporate tax rate is going to increase from 21% to 28%. There's talk about at the individual level when it comes to high net worth folks losing the benefit of a preferential tax rate on long-term capital gains, which right now is at either 15% or 20%, depending on how much income you earn. So there's also talk about a rollback to the higher effective tax rates for individuals, which was 39.6% as opposed to 37%. So I definitely think it's not a matter of if, it's a matter of when, and I think that it's probably going to happen as of January 1st, 2022. Some people are concerned about retroactive tax hikes. I think that the optics behind that in the environment that we're in. Yeah, I don't want to.
Oh.
We lost you, Dan. We lost you again. Sanjeev, do you want to take this? Do you have any
Yes,
comments?
like Rent, Dan was correctly saying the right things. Inflation
Yeah, I
definitely,
mean, we have to set him down, right? He was talking
yeah,
about tax rate increases.
yeah, inflation definitely is going to is there because a lot of money is there in the stock market. Like you rightly said, 5.3 trillion dollars in the stock market. You can see the liquidity, the volume, the stock is being traded at any stock, penny stock to any stock. You take any stock, which is even reason so hard. So and the real estate is going crazy. Not only in Austin, Texas, but also in California. Like in my blog, one house got sold in like 3 days, and like multiple offers and about $4 million. So it's really going crazy, the inflation. And the Federal Reserve has already said they're going to, of course, they're not going to increase the interest rate as of now. It's going to increase the interest rate somewhere in 2022 or 23. And President Biden has already given signals to increase the individual taxes and business taxes. Of course, it's going slow because of COVID scenario. But definitely, I think inflation is there, is going to happen, and definitely there will be increase in tax rates. So planning do become important not only for 2020 tax filings but also for 2021, which is an important area, which is important tax year. And Tax Cuts and Jobs Act, President Trump favorite ones, they will be taken out. QBI deductions and QF, qualified opportunity funds, and all those 9 years that business got bonus depreciation, 179 deductions. All this will be looked into closely by the current administration, and definitely you can see those things going up.
And you got cut off. Do you want to complete what you were saying?
You can hear me at this point?
Yes, yes,
Yeah.
yes, I can hear you.
Okay. Sorry about that. Two technical difficulties in a row, it looks like.
No, we just didn't want to hear about tax increases, so we made sure we pulled your plug.
You just muted me. It was, it was on your end, not my end. I would also just point out that I think that 2021 is a critical year when it comes to tax planning, not just from an income tax perspective, but from an estate tax planning perspective.
Absolutely.
The big part of that is about the lifetime giving. Right now you're looking at approximately 11.9 million per taxpayer right now. The Trump administration was very, very generous. They raised those limits significantly during their time. It's not a matter of if, it's just a matter of when. These
Correct.
lifetime giving amounts could get cut down to $3 million, per person. So it's very important to get with your tax advisors and review your estate plan and see if it makes sense to implement any strategies before the end of the year.
And
Yes,
just to
absolutely.
add something to that, if you're having properties in India, sell it before it becomes problem later on.
Yes, yes. Great, guys. I think any last comments from you before I close out the session, because we're already at 1 or 2. We're past 2 minutes. So any comments from you? Closing comments, Dan, Sanjeev, anything?
I will just say that do the filing in a proper manner. Again, that's I keep saying this. Don't do your filing in a hasty manner. You look into not only for the 1 year, look for future year 21. Like Dan rightly pointed out, this 21 is the most critical year for
Correct.
tax filing purposes.
Correct. Dan, any comment from you? Closing.
Tax advisors, for 2021, you use your advisors if you don't have them. Speak to your colleagues, your friends, get connected with somebody that could help you, because once again, this is going to be a pivotal year before more changes go into effect.
Correct. Absolutely correct. So thank you, Dan and Sanjeev, for so generously sharing your knowledge. I will like to close out today's session, but before I end, I do want to thank the entire management team of the San Francisco chapter for making this event happen. I want to thank the sponsors of the chapter, which was Eisner Amper, Anand Bhavan, Sanjeev Gupta, Chug, AppWrap, Bhatia and Company, Harshwal and Company, Right Comply, and Alright Co. Thank you all for supporting the chapter, and thank you all in the audience for patiently listening to us. If you guys have any questions, Sanjeev's number is there on his screen. Feel free to reach out to him if you want to reach out to us, and we'll be happy to connect you to the panelists and for any follow-up consultations or questions that you may have. The email address is team@icaisfo.org. Reach out to us on that mail and we will connect you guys. Thank you all. Have a great weekend. Stay safe. And I will close the session. Bye.
Bye. Thank you. Thank you.
Bye. Thank
Bye.
you.
Bye.